Good morning, everyone. Big tech AI layoffs. Who really wins the next $1 trillion? So, what horse can we bet on in terms of investing, or what I would do, of course? That is something we will analyze today. That is the question that has appeared in my comment section under the Monday video, Macro Monday, where we looked at the market outlook. Of course, by myself. Okay, so every Monday we have our Macro Monday, Wednesdays AI Investing Q&A, which is today, where I'll take your questions, and Fridays we have a review of the trading bot and always something nice and surprising as well. Okay, so looking at today's question, big tech is firing tens of thousands of people while pouring record cash into AI, quietly reshaping who owns the next $1 trillion of market cap, right? And now, why do we want to know that? Of course, because we want to know also for our bots, is there anything that we need to consider, right? The AI story on Wall Street is not just about new products, it is about a massive capital and talent reshuffling inside big tech, so the Metas and Googles and Microsofts of this world. Layouts are freeing up billions for AI chips and data centers, which means the money that they now don't spend on their employees, they spend on AI chips, data center space, GPUs, etc. But if we look at the research, at least the research that I've done, AI job cuts are not reliably boosting returns. So the map of $1 trillion winners will be drawn by who reallocates the smartest, not who cuts the most people. Now, if we look here, just at the numbers, let me zoom in a little bit. We had roughly 142,000 tech workers laid off so far this year. 10% of Meta were cut in May. Then 7,000 of those were restructured into AI jobs within Meta, and 80% of firms that cut headcount for AI did not get a stronger return. So the companies that thought that if they would lay off and invest more into AI, they haven't actually noticed this productivity boost yet from AI. So my thesis, by the way, is that this productivity boost will come in the coming months and years. I don't think, because if we look at the productivity indexes, PMI, etc., we are increasing also in the manufacturing space in the US, as we saw on Macro Monday. So we're not going downwards, but we are slowly increasing. So I think this is yet to hit the market, and then we will be absolutely zooming. Now, on screen, big tech market caps and AI race. Microsoft currently leading. Meta workforce and AI pivot. We've just talked about that, right? 7,000 roles shifted into AI teams. They actually had 45,000 jobs pre-COVID, and the peak was in 2022, interestingly. So we're still, if we look at it from 2019, we're still up with the headcount. And then we have AI layoffs vs returns. And so, that's cut staff for AI and failed to improve. And then Gen AI projects with no profit and loss impact. Now, clearly, a couple of these sentences are cut off. Apologies. I will fix that for the next Wednesday session. So what does the analysis say? Easily, these are not pure AI layoffs. They're correction after a hiring bubble and bet on AI scale, right? So Meta is smaller than its 2022 peak, but still far bigger than before COVID, just as we had just pointed out. Most AI-driven headcount cuts have not translated into stronger financial performance so far, right? My bet is that we will see that not in the too far future. Wall Street is rewarding capex into AI infrastructure and platforms, not just job cuts in old lines, which we also see. And then the real shift is power flowing to whoever controls data centers, GPUs, and sticky AI platforms, right? There's also this trend where people say Gen AI and AI agents are killing the whole software as a service industry. So, you know, being in the platform or infrastructure business is very lucrative nowadays. So, how could it play out? Incumbent, let me actually scroll for you guys. Incumbent keeps winning. So mega caps keep funding AI from layoff savings and cash flow, entrenching trillions dollar dominance. So this whole, you know, you see it in the S&P and the Nasdaq, etc. These peaks that we're constantly getting is purely carried by these massive corporations. Efficiency without payoff. So companies are overcut for AI. Projects miss their profits and markets punish empty AI narratives. We also see that. And then new platform emerges. Talent from layoffs seed startups that chip away at big tech AI and cloud oligopoly. All right, that's a new word for me, but I believe that is dominant cloud players. So clearly here, it's so I actually find that interesting, right? Just I would imagine myself, if I lose my job nowadays, the job market is very hard. I would probably also try to start something, because building something with AI nowadays, it's never been this easy, right? I'm actually currently working on a boxing application, but that's for a different topic. Way forward. So an interesting fact to watch is how much layoff savings actually show up as AI capex, the GPU spend, and data center build out. Then track which firms redeploy people into AI roles versus treating headcount purely as a cost line. And then focus on where AI projects hit revenue or margin, not just headline and demo sizzle. And pay attention to where laid off engineers land. They are clues to the next wave of AI platforms, right? So who is aggressively buying, right? They might have the funding and might be the next winners here. If you want a safe bet, you know, have a look at these bigger companies that currently carry the market, etc. Right now, I think that really looking at who is spending on GPU, who is getting the engineers of today's, right? I think that should really be an indication of the companies that are currently leading. Now, that concludes today. Don't forget, everything's only educational use only, right? This is only for my personal research, the journey that I track and what I see in the market. Of course, do your own research. And with that, I will see you on Friday, where we have a look at, which actually happened, the trades that the trading bot has done thus far.